Let me start with you, John. You were listening to the labor secretary and then the politicians. I was surprised to hear Pete Sessions say that, Republicans need to know a little bit more. What matters to you in terms of what these tariffs are doing in the markets?
So for me, the focus is on this increase in uncertainty, and which the markets will call increase in volatility. And the reaction to the tariffs has been a very dramatic spike in volatility, which is the VIX index, has gone from 20 to 45 in the past 3 days. And then the reaction of the stock market, clearly, with the 5 trillion wipeout of value, Nasdaq gone into a bear market correction, S&P 17% off the highs, 11% lower in the past 2 days. Credit spreads in the corporate and high yield markets have all widened out. All of these are not positives for these policies. And that's even before you kind of look at how these policies and this uncertainty is affecting the behaviors of the consumer and households and corporations.
So how do you process the sell proposition, Alison, from Trump of, well, this is what we have to do. We got to turn the screws, and it's only been a couple of days. No big deal.
It is a big deal if you're an investor in this market. We even saw some IPOs that were ready to go. They've postponed their IPOs. So you're seeing an immediate real world business impact just on the beginnings of these tariffs. And then, of course, I think the overarching reason why you're seeing this massive sell-off over the past 2 days is there's a concern about a recession, that the tariffs will have a real effect on the economy. JP Morgan increased its likelihood that a recession will happen from 40% to 60%. Why? Because what are these tariffs? They're a tax on consumers and businesses, and it's a big hit to the economy. And by targeting things that Americans buy, this causes a lot of disruption in the economy. So the thinking is, if these policies stay throughout the year, it could cause real damage to the economy and cause a recession. And I'm also hearing the S word being thrown around. I'm talking about stagflation. That's even worse, to have a recession with high inflation. That's an even stickier situation to get out of. It leaves the Fed with fewer tools to turn to, because if you go ahead and keep lowering interest rates, if I check my economics 101, that could stoke inflation even more.
Yeah. Right. Hey, just to touch on that point,
very stimulated by that. Go ahead.
Well, if you look at the March FOMC meeting and look at the 2 highlighted risks that they all had as their risk to their outlook, there were 1, rising inflation, and 2, rising unemployment. Both of that plays into the stagflation scenario that the markets are worried about and was just mentioned. So
the secretary
FOMC is worried about it. The markets are worried about it. Consumers are worried about it because you're seeing it in your real big pocketbook on a daily basis. So that uncertainty and that scenario is a very concern for everybody.
First, never cut me off again when I'm about to ask you a question. Second, so what do you make of when the labor secretary said, hey, the workers know that this is for them? When are tariffs good for the workers and when not? What do you look at for that, John?
Look, I think it's a blunt tool that can be used. And if you look, there are benefits to it. They will take time. But as a blunt tool, there's going to be reverberations that are most likely negative in the short term. And that's what we're trying to figure out. So if you look at the trade data, yeah, we have trade deficits with a lot of countries. There's a way to work through that. When Trump was in office the first time, he had tariffs on China. The markets absorbed that. They looked positively. Biden kept those tariffs in place. This is much different because he's coming at the global economy. He hasn't even tried to negotiate any different terms on trade. He's just coming and putting a sledgehammer down. And that's what I think the markets are seeing. They're anticipating that he would back off with the negative kind of stock reaction leading up to the tariffs. And when that did not happen on the 2nd, you saw this continued selling then that occurred as people really realizing that he's dug in on this idea with the tariffs. So time will tell. I just think it's not the immediate reaction is fairly negative by the markets, fairly negative to the consumer, and it's more of a long-term game. But we'll see, how that plays out because we're in uncharted territory here.
So, Alison, John was explaining it to me earlier today about how, this is not something you usually do this broad and this deep. This is historic and not for good reason. Now, that gives him space to pull back. I thought it was really interesting to hear Pete Sessions say, Alison, I wish he would explain what he expects out of these. Usually you want that first. Well, that's unusual to hear that from a real Republican, isn't it?
You know, the politics aside, I mean, I've been hearing analogies being made to the massive sell-off we've seen in the market over the past couple of days. Analogies being made to what we saw during COVID, and then you look at what the Dow did today. This is the third biggest plunge it's had. Three historic plunges, and the other two were during COVID. The difference is that this situation can be changed literally this weekend, Chris.
Hey, thanks for watching. Go to joinnn.com to find NewsNation on your screen. And don't forget, click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.